EURUSD and GBPUSD sales have again been playing out to absolute perfection. Congratulations to everyone, and I mean everyone that has been profiting. It's been an amazing couple of weeks, not only for all of you guys who are passing challenges and getting those payouts, but also for myself, again, with the exact trades that I'm discussing here on this, let's say, market outlook. You can clearly see, again, EU and GU sells for $10,500 profit. Again, both prop from challenges and live accounts performing amazingly on the overbuys that we have had for the past 2 weeks or throughout the entirety of actually both September and October. And I see all of your comments. So again, means the world if you can leave a like and comment underneath this video, and let's just dive straight in. So EURUSD, again, still bearish here on the daily time frame. Not much has changed. We can see that yesterday we made an overall connection with the order flow. We had a nice tap here in towards the overall supply zone, and from there we've again been pushing further in towards the downside. Now my overall targets for EURUSD still are further lows, with this low and this low here being significant liquidity lows for myself, which I'm definitely looking to target before there is any potential for, let's say, a real kind of like pullback slash reversal further in towards the upside. Now the fundamentals on the euro are still not in its favor, and we are still bearish on the euro based around the situation that is ongoing within France and within the Eurozone as a whole. Now, what I'm doing here is I'm just following the overall daily order flow further in towards the downside and looking to scale in on overall liquidity highs. Now, yesterday I marked out quite a few liquidity highs, with mainly this one being of interest and this one being of interest over here. However, as you can see, last night or yesterday throughout the New York session, we made a little bump in the road right over here. That has now been taken out this morning, and now we're again continuing in towards the downside. So I wouldn't be surprised if your USD does head down lower from here, eventually towards that overall liquidity target of around 1.15740. So following still the overall shorts further in towards the downside here on your USD, obviously you want to be positioned from over here where I was positioned myself. Again, where I entered back then was on the overall bump in the road, which is the overall high that we have positioned over here. That for myself was the entry, swinging this further in towards the downside. Now, obviously a beautiful 1 to 2, and somebody commented yesterday, but a 1 to 2, that's only that with 150 pip drop. Well, obviously there's a lot of lower time frame entries on the 1 hour that you could, for example, have taken again to further short euro USD in towards the downside, as for example over here, as there was on this wick on the 50-minute time frame, and then a 50-minute change of character, some nice shorts to be taken in towards the downside, where then the higher risk to reward could have been achieved. Now, again, for myself, euro USD just remains bearish on this market until we would, for example, see a daily structural shift where this overall buy before the strong sell down were to be broken. Only if that high were to go, then I would be looking for a long position. Otherwise, any potential pullback for me is just another opportunity to look for further selling on euro USD. Now, a lot of you are asking, but Fabio, now I want to know what I can do today. Well, obviously the move has already happened. If you are still asking me, Fabio, can I enter the market? You are simply said a little bit late to the party. Why are you late to the party? Well, if we look at the current market structure here on the dollar index, we can clearly see that we have an impulse up, we have a retracement down, we have an impulse up, we have a retracement down, and we have another impulse in towards the highs. Now, what happens once you break market structure? Well, at some point in time, you are going to see a pullback phase where the market retraces in towards the downside, and that is a phase that we are nearing here on the dollar index, in my opinion, because we are well after the break of structure phase, and obviously the dollar index could just head up higher, but that's why you already want to be in positions well within the overall impulsive phase, because where you want to enter as a trader is obviously here after taking, for example, out this liquidity and then seeing the market structure shift in towards the upside, and then forming this demand zone together with the monthly and the 3 monthly open as an area of support. That is where you then, for example, want to enter your very first position. And then if you're looking to scale in on that position again for further euro USD and GBPUSD shorts, then you want to enter again on the overall order flow on the next demand zone. So then again you enter over here, and then what your overall goal of the game is then target the overall liquidity high, for example, positioned over here, as from there or from even this higher liquidity high, we can expect an overall pullback to happen. But these pullbacks only happen when we see what? When major liquidity gets taken, such as, for example, this high over here, or when we see a change, or together with a change of character. Now, as we can see for now, the overall market structure here remains bullish on the dollar. We remain within respecting the overall order flow, and we continue our overall route up higher. Now, once we take out liquidity and we then see the change of character, then for example we could see a short-term downside push to, for example, this liquidity low, and then we can look for new long positions. But now we're trading after the breaker structure, so this is not a moment that you want to get into new positions, but you want to be scaling out of existing positions which you took, for example, over here or over here. So that's kind of like my view on the dollar for now. I'm happy with the positions that I still have running, and you guys should be too, because if you've been watching these market outlooks, and obviously you have had the opportunity to be in those dollar buys. And now we're nearing a region where a pullback can happen at any point in time. So now you want to be safe, because again, we're trading after the breaker structure. So the way that I view it is that before the breaker structure, that is the so-called green zone, there you can be very aggressive. But now we're entering the so-called orange or amber zone, and inside the orange/amber zone, that is pretty much until, let's say, the very last liquidity high, where you want to be very, very safe. So for example, I view this high here also as a little liquidity. So this is the orange zone, where at any point in time a pullback can happen, but it is still likely that liquidity is going to get grabbed, and then above kind of like the last liquidity high, that's when you're then, let's say, in the so-called red zone. And inside of the red zone, that's not really where you want to be, because that's really when you kind of like want to take full profits, in my personal opinion. Obviously, the market can do whatever it wants and still start, let's say, pushing in towards the highs and even towards this high over here. But this is definitely kind of like a region where you want to be a little bit safe and maybe trail your stop loss underneath, let's say, the overall orange zone over here. So yeah, that's the way that I view it, and the way that I look at the dollar index for now. So yeah, stay safe. The overall bias has been good. We can see further long positions in the near future. Let's see, first of all, 99.074 get hit. We nearly kissed it yesterday, should be kissed this morning. And then after that, we can kind of like see what the next positions will be in towards next week again. But overall, my week/month is pretty much already done with this overall dollar leg up being called to absolute perfection. Now, going into GBPUSD, because again, I get a lot of questions about GBPUSD, it is tanking in towards the downside. Guys, remember who bloody called this GU short. Again, where are we trading here on GU? We are trading in the overall impulsive phase towards the overall low, which is obviously our target over here. So again, the way that we look at GBPUSD is on the daily time frame, and my chart may seem very confusing with all of the lines and everything, but I promise you it's very simple. We have an overall impulse in towards the downside here. This is then obviously going to be your overall green zone in towards the lows. Then we will just keep this now again as the overall impulsive phase. And we're looking to trade with the market structure. So the market structure was bullish over here, then shifted bearish after the breaker structure here, then the overall retracement, and then here you had the change of character / confirmation that the market wanted to start to sell off. And as you can see, since then the order flow has been holding. So we're well within the overall impulsive phase. Daily fractal structure remains bearish, and now obviously you can just continue shorting this all the way back down towards this blue line here, but the immediate target is here on the 4-hour time frame, this blue dotted line here. And just remember who called this, guys, because again, I've been saying it every single day, GU shorts, and all you're simply doing is following the daily fractal structure and the 4-hour fractal structure. And it's been a long time since I've been seeing fractal structure literally respected as perfectly as it has been now. And now obviously this here is a target low. So the way that you now want to view it is that, okay, here we had an impulsive phase down, then here we had an impulsive phase down, and now here again we're well within the impulsive phase in towards the downside. So once we get towards this blue dotted line here, then what region are you entering on the chart? You're entering the overall orange zone / amber zone, right? Because after a breaker structure, that's when you expect an overall pullback to happen. So until this blue dotted line here, you can be very aggressive with still remaining in those short positions. So, or well, because again, we expect what to happen? The trend to continue, right? Push down, pull back, push down, pull back, push down to happen. And the push down should happen until this blue dotted line here, the breaker structure line. And then at any point in time after a breaker structure, the market can retrace. It can retrace and just grab liquidity and then retrace, or it could still continue and then, for example, retrace. That we do not know. But what I do know is that we're currently in the impulsive phase. And in the impulsive phase, I'm always very happy to be very aggressive with overall short positions taken. And then again, yesterday we reacted nicely to this overall buy before the sell here. This was a very strong supplies on this buy before the sell. Why? Because it took out liquidity here to the left. Again, the overall bump in the road. So we had the impulse down. And then on the 15-minute time frame, you can clearly see again the bump in the road gets taken out, and then the sell-off. And then again, bloody hell, man. GBPUSD has just been too clean. And the best part is that all of you have been profiting with me on this thing. And then again, retracement into supply, and then it just sells off in towards the downside. So yeah, looking for this low, obviously here to get hit on GU. Then we have AUDUSD. Well, AU, I've already mentioned, AUD, the Australian dollar has been relatively strong, so that's why it's lagging behind. And I've always said EU and GU are the better options, so that still remains. EU is just not interesting for me because AUDUSD is, or the Australian dollar is very, very strong at the moment. So just don't even pay attention to it. New Zealand dollar rejected the monthly open and the free monthly open. That has retraced and taken out a bump in the road, which is this over here. So again, this is the overall impulse down. Then you have two bumps in the road. You have this one over here and this one over here. This one got taken out. Change of character happened. And again, you could have sold on a change of character low or put a limit. If you put a limit, you wouldn't have been tagged in. But yeah, overall looks good to continue its overall leg down lower. Again, here a break of structure, and this is what I mean, right? So well within, let's say, the orange zone over here, or the green zone, we make that green. This here is the impulsive phase, right? And now then what happens after the break of structure line, you get into the orange zone. So that's what I mean, like any moment in time after the break of structure line, the market can start pulling back. That's why I say, like, be careful with in the orange zone, because that's dangerous. And now again, it seems that we're in the overall green zone, so you can continue to look for sells, but obviously stay cautious because the dollar index is nearing what? It's nearing major liquidity, or the dollar index is currently in the orange zone. So preferably for a very good trade to occur, you want both pairs to be in the green zone, if that makes sense. So yeah, that's some very good, valuable information for you. So you want to align the dollar index with the pair that you are trading. So you just wanted both the dollar index and this dollar pair to be well within the impulsive phase. So when, for example, we look at NZDUSD, you want NZDUSD to be trading, for example, over here in the green zone, and then you want the dollar index, because dollar index is inverse, right? Because we're looking for dollar bullishness. You want the dollar index to be also in the green zone underneath the break of structure line. Then that's when you'll have, like, qualitative, the best trade possible on a dollar pair. So that's why I'm saying, like, be cautious with NZDUSD, but it still looks good to head down lower. Then, of course, we have dollar Swiss, dollar yen, dollar CAD, and gold. Dollar Swiss, what did I tell you guys? Also, all week long, further upside expected from this thing. Now it's in supply, so now I would be looking to take some profits off the table, also because we're after the break of structure line here on the 4-hour time frame. So again, look at this from the perspective of here the impulsive phase here the impulsive phase until here, and then if you look at, for example, this over here, this is again the over orange phase, and then the orange phase continues until where? Until major liquidity over here, right? So that's then when the overall retracement starts. That's why I'm talking about the dollar index now, for example, being in the orange zone and it's nearing major liquidity highs. So it's very similar to like USDCHF in that sense that, again, the orange zone continues until the open on the monthly and until that liquidity high. So yeah, again, sometimes I feel like I'm talking Chinese, but I hope you guys understand what I'm trying to explain, everything. If you don't really understand what I'm saying, let me know, because then I can always kind of like further explain in Discord. Link in the description of the video, by the way. But now this supply zone here is an important one. Keep your eyes open. Could potentially push the market down lower together with the dollar index and taking out liquidity. But yeah, if that supply zone breaks, then I'll just be looking to trade this up higher towards over here. And then we have dollar yen. Dollar yen is one of those pairs that I just don't really like touching too much because it's so overextended. I'm not going to try and call the top on this. It's kind of like an untradeable pair at the moment, in my opinion. I would really only be looking for a short position. Yeah, from where? Maybe from the yearly open. I mean, I don't really see anything too clear for myself besides this high over here and then this high over here. So I'm not looking at this blue dot line here. I'm just looking at these two lines. So 154.805, and then we have here 156.795. So those are kind of like the two levels I'm looking for potential pullback. And then I'll be looking at the 4-hour time frame for a change of character, then maybe take a short position if the yen basket then aligns. Somebody also asked me, because the yen basket is now inside demand on the weekly, so that could potentially push us up higher, but USDJPY is just not there yet to look for dollar yen short position. Also, again, I'm not trying to call the top. So what I would do is I would wait for that major liquidity to get taken. So this blue line or this blue line, preferably this upper one, and then get in on like the overall order flow after like a double kind of like fractal break well within kind of like premium pricing. That's what I would do. Only then would I kind of like get involved with USD yen and then USDCAD. Yeah, that one has been manipulative, very manipulative, because the Canadian dollar has been very strong. It took out major liquidity here and then gave us a nice pump up higher of around 30 pips. Retraced last night and then again this morning is pumped up. Yeah, I mean, again, it's similar to AUDUSD, very consolidative, not the best pair to trade, but it gave a nice reaction from the lows. But yeah, not ideally a pair that you want to be trading. And then, of course, gold. Yeah, gold is still bullish. So what you want to now look for is, again, okay, liquidation. So looking here at the 1-hour time frame, what's happened is that we have taken, let me get the liquidity. We've taken out this here as a liquidity low. Again, you see sweep of the liquidity. Still, you have equal lows here, so I don't like going long when you leave equal lows behind. So this demand zone is not a demand zone that I would necessarily look to long from. So I would look again for another push down, maybe take out, for example, this low here, and then start looking for longs on like a more clean 1 hour change of character, where this low, because if this low here swept this low again and then gave a V-shape reversal, then it would be a much stronger demand zone that actually liquidated a low. But now you just leave liquidity behind. So I wouldn't be looking for gold longs just today, maybe tomorrow or into next week if we can see a little bit more downside. So that's it for today, guys. Thanks so much for tuning in. Wish you all a fantastic trading day. Any questions, as always, let me know in the comment section down below. And yeah, I hope you guys appreciate these videos. Today is a very important day for me because somebody who I care very much about will be passing away, sadly. So this video is dedicated to that person. And if you could leave a like and comment, and maybe a moment of silence at 2 p.m. Central Eastern Time, that would mean a lot. Thank you guys. Bye.